maybe you can tell us a little bit about the acquisition last year of Veritas. I mean, after that was announced, it became you folks said you were now the largest data protection software provider by market share. I'm wondering how that has transformed your business strategy in some way or positioning, your competitive positioning. What has that done?
Yeah, I think first of all, this trend is a landmark transaction. This would make an amazing business school case study. So just to kind of like the setup here would be as follows: Cohesity private company with a GAAP run rate of about 550 million in revenue, just hitting break even. It's kind of like a classic Silicon Valley late stage growth oriented company. At break even 550. We buy a company, actually not a whole company. We bought 72% of Veritas. So we did a carve out from a private entity, which increases the degree of difficulty dramatically, by the way. But the entity that we bought was effectively, double our size, 1.15 billion in GAAP revenue. So you ask yourself, well, how does a company of 500 million buy a 1.2 billion dollar company? Well, the answer is you have to have a compelling case for the combination, and you have to raise a lot of capital to effect the sale. The compelling case is pretty simple. Horizontal consolidation, Veritas, incredible install base, but old gen product, Cohesity, next gen hyperconverged product, better together, 4,000 customers plus 9,000 you put together, super high grade enterprise grade customer base with only 2% overlap, which is unbelievably low. And to finance it, we became a deal specific private equity company. We raised 950 million of equity and 2.8 billion of debt. It's just kind of like what you'd see in a normal kind of PE transaction. So we did this all on our own. We sold Cohesity equity on the basis of closing this transaction and put the company together. So we closed the deal about 8-9 months ago. So it was December 9th last year. And what we've learned since then, it's not an acquisition, it's not a merger of equals, it's a merger of unequals. 1/3 revenue Cohesity, 2/3 coming from Heritage Veritas. It's been like I said, a very complex financing transaction. There's a lot more details beyond just the high level stats that I shared. Merging the sales teams, the marketing teams, the back office teams, and the core systems to operate efficiently has been a lot of work. We've integrated in record time. As I sit here today, we've converged every single system except the customer care system, which will be done this November. And so we integrated systems at probably 3 to 4 times the rate at what you would typically see in these large M&A transactions. Customer response has been great. The core thesis of the deals that the company would be better together and we'd have a better combined roadmap and a future migration path and future-proof the Veritas install base has proven out to be absolutely true. So at the core of it, like it was a good idea, wasn't just, financial engineering. The core idea, looking at like what the product value proposition is to the combined customer base, has been rock solid, and I think that's been it's been great to see that play out.
Tell us something about your AI investments and maybe your mindset when it comes to investing in AI and trying to understand the ROI attached to those investments.
Yeah, I think that every company right now is figuring out like, okay, what does AI mean for me? Can it drive revenue? Can it optimize costs? Can it replicate, high cost headcount? Can it supplant existing systems? The answer to that is yes to all the above. Every company is going to have to figure that out. So our AI investments consist of really kind of two categories. One is like, we have built and we're selling today an AI product. So there's a whole initiative, funding R&D, et cetera, product management, and go-to-market, et cetera, around the Cohesity AI product, which is called Gaia. And in terms of internal use cases of AI, we are, we have kind of a loose coalition of different executives and contributors and different functions who are sharing the agentic AI apps that they're envisioning to, better their department's functions. And these things are like spinning up. And so we have, we've elected to have a private cloud AI model. So we, house on premise or in our own private cloud, an LLM and all the data that we're using. is our data. It's not going to just, pure, public, company infrastructure. So we've elected to use a kind of a private cloud approach. Back to my earlier comments about cloud and how it evolved into sovereign clouds, private, public, et cetera. We've elected to be more guarded in terms of the AI rather than generically submitting it to an LLM to get back a query. It's like an LLM, an environment that we uniquely control. And I think a lot of corporations are going to go that route, right? Because, again, data is a strategic asset. Um, and so what we're doing is like customer care call deflection. We've loaded up a couple years of case resolution from the customer care team. And so first response, suggested diagnosis, we're seeing extraordinary, payback on just that one application. We're digitally or AI enabling, like we've taken every single policy that we have and someone wants to onboard and, rather than reading like a bunch of policies, you want to just freeform query our policies, T&E, whatever, it's like right there. You can get an instantaneous, summary. We're looking at when we evaluate outside vendors and application purchases. I'm personally investing time with the founder of an AI-enabled go-to-market application to really understand the tech. Because if we're going to make an investment, we're going to go deep and decommission, as I noted earlier, a lot of other kind of like legacy traditional, SaaS applications. And so, there's an opportunity. There's going to be all kinds of like specialist AI-enabled vertical applications that become available. And so the question is like, which one of those makes sense for your business? Because the difference between an AI-enabled, SaaS application and traditional SaaS application can be dramatic in terms of the benefit, the payback, et cetera. And so it's going to be a super exciting time in the short term for agentic AI applications to spring up. These companies, they can spring up and scale very, very quickly. They can go from 0 to 100 million in ARR in, in 2 years. And that's kind of like unheard of in a traditional application environment. So identifying those AI applications that make sense for our business and just having the courage to swap out what we used for like 5+ years for something that new is something that we're doing and encouraging. And of course, then there's the coding productivity gains. I don't have an exact stat on that, but we're using agentic AI to become more efficient in terms of lower level coding tasks. So that's going to be long term, I think, tremendously beneficial for our R&D efficiency.